What's going on, everyone? Welcome back to Epic University. This is Brady Clark coming to you. And in this section, we're going to be going further into Fibonacci. Okay, and I'm going to be showing you guys how to use Fibonacci to implement it within your own top-down analysis on a day-to-day basis in order to be able to find key Fibonacci levels from the 4-hour. Okay, as we've seen, with all forms of technical analysis, there's multiple ways of doing things, right? There's multiple ways of implementing all forms of technical analysis, including Fibonacci. And so in this section, I just want to share with you guys a very accurate way of finding these key Fibonacci levels and how to incorporate it into your own trading. Okay, so really quickly, to use Fibonacci, Fibonacci is essentially a way of finding key support and resistance levels, right? If you come on TradingView here, this is the main, charting platform that everyone's using. And if you come over to the third toolbar down, it'll first show up as this pitchfork. And if you click that little out arrow, Fib retracement is the Fibonacci tool that I'm going to be sharing with you guys on how to use it. So the main typical way that people would use Fibonacci is they would drag from a significant high to a significant low. Okay, and then they would use each of these Fibonacci levels as a key support and resistance level. Okay, and you'll even see just from that really brief drawing that price is respecting these levels, right? Not super accurately, but it is respecting these levels. And that was just a quick brief draw out from these significant highs to lows. Okay, that's the most typical way that people would use Fibonacci. Okay, I'm going to show you guys exactly the exact points to be dragging your Fibonacci from and to. And you'll only have to reset this Fibonacci draw up once per week, right? Because you're using the previous week's highs and lows to mark out. Okay, so first thing is first, the 4-hour time frame is the main time frame where I always draw this out on. Okay, just to get set up, and you'll see why. Okay, the first tool that I grab in order to put in my Fibonacci, before I even go and touch the Fibonacci, the first thing I do is I just come and I grab, where is it here? A vertical line. Okay, and all that I do is I want to be able to map out the first candle of the current trading week we're in and the first candle of the previous trading week. Okay, so if we run this through here, we can see 29th, 27th, 26th, 27th. When the Forex market closes Friday evening, it opens back up Sunday evening. Okay, so you have that break of 2 days there. And so you'll see here, we go from the 27th to the 29th. 27th, 29th, 27th, 29th. So on that first candle of the 29th, we can clearly understand that that is the first candle of this new trading week. Okay, and if we do the same thing, we just run our cursor across and we look at the date on the bottom there, 24th, 23rd, right? We go, again, we have that 2-day break. We go from the 20th to the 22nd. Okay, so I just put in that vertical line there on the first candle of the 22nd. Okay, and now we can see the entire previous trading week mapped out from this vertical line all the way to the candle before this vertical line, right? Because this new vertical line is part of the new trading week. So we don't worry about it in this previous trading week. And so what you want to do once you have that area mapped out is I always use the previous week's trading data to predict the current week's trading data. Okay, so whatever information or whatever price movement that we have in this previous trading week, the first thing we need to clearly identify is the highs and the lows of this previous trading week. Okay, we can see our highs are up there and our lows are down there. Okay, and so with Fibonacci, we always want to drag it from left to right, no matter what. We're always going to drag from left to right, whether it's from the high to the low or from the low to the high, it's always going to be left to right. And so what we need to look at is when we map out this previous trading week here and we see our highs and lows, we need to see which occurred first. Okay, in this trading week, which happened first? The highs or the lows? The highs did, right? We can very clearly see that they happened right at the beginning of the trading week and the lows didn't happen until the end of the trading week. Okay, so in this current situation, we're dragging from high to low, right? Because our highs occurred first in the chart. right? From the tip of that wick all the way to the tip of the wick at the lows here, and done. Okay, that's all I'm doing to drag out the Fibonacci. Okay, because then we can be using each of these key levels as key Fibonacci levels for support and resistance, using it in our own top-down analysis. Okay, because we break this down to the hourly, we'll be able to see how well these levels are being respected. Okay, and the main way that I use Fibonacci is as confluence for other, components of technical analysis. Okay, so say we have a trend line coming over the exact same area that we're looking at. Say we have a trend line coming right through here, and we also have a rejection off the 618. That would be a confluence in itself. Okay, another way that I use Fibonacci is understanding that Fibonacci kind of works as a ladder. Okay, so when price comes in, if we have a break past a 38.2, a clean break, there's a really strong chance we're targeting that next fib level, the 23.6. Okay, every time that we come into a new Fibonacci level here, the price has one of two options. It can either reject away from it and use it as support, or it can crack through it and keep heading towards the next targets at the 0 Fibonacci level. Okay, and so that's a main way that I'll use it as a confirmation to get into a position, or as confirmations to hold a position. Because say, for example, if I got into a buy way down here, almost at the lows, okay, and I was still holding, seeing price clearly respecting above that 38.2 and having a difficulty pushing back below that 38.2 is a good confirmation for me to stay in this position and keep pushing higher. But with that being said, it also gives me that clear visual that if we have a crack back below that 382, it might be a good idea to get out of my buy, because we could be heading back towards the 23.6 and back towards the 1. Okay, now let's hop over to a different pair here. Hop over to Euro AUD. I'll show you guys another setup here. Okay, so the first thing that we do is we grab our vertical line. We run this through, we find the weekly break. So we're always looking for that 2-day break in the week. 4 hours, the easiest time frame to do it on. Okay, we see here, go from the 27th to the 29th. Run it back through again, 25th, 24th, 23rd, 22nd, 20th. See, we go from the 20th to the 22nd. So we put that vertical line on the first candle of the 22nd. Okay. Now, when you draw out your Fibonacci, you always want to make sure that you are paying attention to the first candle of this previous trading week and the last candle. Okay, and always remember that this vertical line here that's sitting at the end or the beginning of this new trading week is only applicable to this current trading week. Okay, so if we had one of our significant highs or lows sitting on this vertical line, that wouldn't be included in the Fibonacci from this trading week. Okay, because that's part of this new trading week. Okay, so now that we have the previous trading week mapped out with our vertical lines from the 22nd to the 27th, now the next thing we got to look for is, of course, our significant high and our significant low. We can see the highest point in this previous trading week was right here, and the lowest point in this previous trading week is right here. Okay, so we got to see which one happened first, the high or the low. If we're looking from left to right, the high happened first, right? Of course, we can see this happened before pushing down here. So, as always, dragging from left to right, and in this current situation, we drag from high to low and across, right? From the tip of that wick at the highs to the tip of the wick at the lows, and then we just drag it across so we can see the levels cleanly. Okay, and then if we break this down to the hourly, we'll be able to see exactly what happened right when we came into this new trading week. Right, new week opened, we rejected off the 50, pulled back down, fiddled around the 382 for a little bit before skyrocketing up. Okay, and the same situation, right? You could have been using this in confluence to get into a position to the upside. You can use it as confirmation when you're in the trade, right? Because if we got into a buy somewhere here, and we keep seeing price coming in and taking out Fibonacci levels. So each time we snap a new fib level, it's more of a further confirmation that we're, continuing this push to the upside. Okay, but then as you see price start to snap back down below the 78.6, below the 70, it can kind of open your eyes to potentially getting out of that position or closing out part of your position. Or you always want to see how price is reacting to each of these Fibonacci levels. Okay, and so any time that you have a break outside of the 1 or outside of the 0, I'm always using the 1.27 and the 1.618 as kind of my target areas. Okay, anytime we have a snap outside of this 1 fib level. Or vice versa, if we have a snap outside of the 0 fib level here, then I'll be using the negative 0.27 and the negative 0.618 as those potential target areas. Okay, but the main way that I'm using each of these Fibonacci levels is essentially just to find key support and resistance levels to be able to use as part of my own top-down analysis. Okay, and when you draw out Fibonacci in this specific way, using the previous week's data, you'll find very precise and very accurate forms of these Fibonacci levels. Okay, so with that being said, I appreciate you guys watching this section of Epic University. I hope that you got value and a deeper understanding for Fibonacci and how to use it in this specific way. And with that being said, everyone have a great day.